Am I being heard? Am I being heard?
Yes, sir.
Okay.
Yeah.
So a brief conversation on alcohol, basically. So alcohol is just like an ethical community banking, right? A service, more like a digital, a Sharia compliant digital infrastructure for cooperatives in Nigeria. And it is stemmed from, what we observe as problem and trying to bridge the problem that we observe in the cooperative world. We realize that, the cooperative, majorly run on outdated manual operations. And for majority of cooperative dealing, there's always, poor transparency and also trust as well too. And over the years, we've also observed that there are more like weak reporting and also governance around, Islamic cooperative basically, and majority of the tools or majority of the things that happen in the cooperative basically, they are partially not Sharia compliant majorly. So these are part of the problems that we observe, and at Halcore we are trying to provide solution for that, trying to create a Sharia financing model, right, that would basically just help solve some of this problem, and to automate saving as well, to loan management reporting, members management, and scalable growth as well too. And those are some of those things that we are planning to do for Islamic cooperative basically. But Safir series is just a way of getting cooperative members and also admin together to discuss some of the trivial issues that they are facing in their own space, and try to see what more we can do in order to save the face of Islamic cooperative in Nigeria basically. And that is what basically we do um at Alcor, and also for the Safari series as well too. So I don't know if probably for now, because we would be starting I think very late. We have issues. Not really an issue like that. I don't know if if the speaker has joined yet. We are partially trying to await our speaker to join. We have a bit of issues, and he promised that
Guys
he
on the
would.
call.
He's on the call already. Okay, alhamdulillah. So before then, I don't know if we probably have any quick question, probably clarity before we proceed. If you're just joining us for the first time, I don't know if there is anyone here that is just joining us for the first time, that you're just getting to see us for the first time and also getting to join our session for the first time. Anyone?
Yes. I- Only for the first time.
Okay. Thank you. Where are you joining from, please?
I'm joining from Abuja.
Abuja, beautiful. Are you an admin for a cooperative, or you're just a cooperative member, sir?
Hello?
Okay. I think I lost in there. I said, are you a cooperative admin, or you're just a cooperative member?
Registered as admin.
You said what, sir?
Admin.
Okay, beautiful. All right. It's also another platform where we are looking at working with, as many cooperative as we can work with, to sell our model to them, and also see how we can also come, to service them as well too. So inshallah, probably after the call we can connect after the call, inshallah. So for us not to waste the time, since we have our speaker here already.
Assalamu
So
alaikum
just like
warahmatullahi
I said,
wabarakatuh.
wa alaikum salam wa rahmatullahi wa barakatuh.
I'm joined for the first time as well. What's your
Okay,
name?
you're John. All right. Inshallah, probably we'll just take that, probably at the end of the session as well too.
Okay, thank
All
you.
right, inshallah. So we'll probably just drop like a kind of a contact where you can also reach us, so we can also add you to the platform as well too. If you are
Okay.
probably an admin, a cooperative admin, so we can
Yes.
add you to our platform. All right, beautiful. That would be nice. All right, Jazakumullah khairan. Thank you. So just like I've said that, over the past couple of months, we have organized series of, we've had sessions. You understand that, to actually address issues that revolve around Islamic cooperative, and then we have today again as well too, wanting to discuss another very trivial and also important, conversation that revolve around, cooperative as well too. And to do that with us, to do that for us, we have Dr. Lukman Larry Seriki. Is the internal Sharia auditor at the Alternative Bank. And today, inshallah, he would be discussing with us, the non-performing facilities, the NPFs, in cooperative Sharia compliance strategies. That is the conversation that we are going to be having today. So, with an unsounded applaud, let's make welcome our honorable amiable speaker for the session today, Dr. Lukman Larry Seriki. Assalamu alaikum wa rahmatullahi wa barakatuh. Let's have you, sir.
Walaikum salam wa rahmatullahi wa barakatuh.
Thank
Please,
you.
can you tell me how long I have so that can manage
Okay.
the time?
Okay, because we started late, our session is always for 1 hour. So I don't know if there's anything that you can do for us, probably 25 minutes, if that's going to be fine, 25, 30 minutes.
Okay, yeah, that will be fine. That will be fine.
All right. Thank you
Please,
thank you.
I also need to apologize beforehand, and that we might likely be hearing some background noise. It's also the reason for this delay. I'm currently on transit, and so you might be hearing some background noise, especially when there's an announcement, because I'm currently at the airport. So please pardon me. Assalamu alaikum.
All right, no problem, sir. Wa alaikum assalam wa rahmatullahi wa barakatuh.
Focus on an area that concerns virtually everyone, because what we are all enjoying as Allah subhanahu wa ta'ala enjoying all of us in terms of to cooperate towards towards good. So now the good for this part is that the cooperative that we're talking about now is the Sharia compliance cooperative, and in it there's a danger, and that danger part of it, which also affects the big financial institution, is that area that we also want to look at now, because it's not an area, it's an area where you also find some people misunderstood on how it should be. So like I said earlier, it's an area that's very important, especially because the cooperative plays. You can move on to that slide. Because the cooperative make important and critical role when it comes to financial inclusion, especially in community where people have limited access. Even now that we have, we cannot say limited access to financial products now. We can even say even limited access to financing now. Because with cooperative, you have less of what's it called, which is where the danger, less stringent in terms of where what's it called, because usually it is people centered, and unlike the investors centered kind of institution that will require a whole lot of things, and a lot will be required to set it up, and a lot of in terms of governance. Here you have, let's say, minimum, because it's usually not what's it called, not as stringent in terms of setting up. Now we also have but what is this cooperative? Like I've said earlier, we have, it is a people central, and usually, and that's what also makes it different from the a big financial institution now. So because this cooperative is usually it's owned by member, and is also controlled, is a member control institution, unlike the investor driven institution. Please, next slide, please. Here, the foundation of a cooperative is usually built on voluntary membership. People voluntarily becomes member. Usually, talk about the democratic control. We talk about the equity in distribution of the benefits, and also, of course, which is the basis, the mutual support and shared responsibility. But we also need to know that in terms of the features, why it's different from bank and also financial institution. As you can see on the screen now, these are some of the areas. I will try not to focus on what you can easily see on the screen. So these are some of the areas that you will see where the cooperative is usually different from where you talk about membership. In the banking or financial institution, you talk about shareholders and investors. Now, the purpose, which is very critical aspect, and which is where the cooperative needs to idea because it is member because the whole idea is that it's about membership welfare, and that is where the disease that we want to talk about because it is a disease because it's also a disease not just for cooperative, it's also a disease for a bank or financial institution which aim is profit maximization. Now, but funding, unlike the conventional or an Islamic bank or an Islamic financial institution, where you look at deposits, equity, or commercial fund, usually it is from the member contribution, which is another issue that we're going to also look at. So now, sorry,
the final announcement on
apologies. Like I mentioned earlier, you're going to hear some noise. So the financing focus, because if it's a Sharia compliance, we'll not be talking about lending focus. We'll be talking about financial focus, except that the cooperative is only focused on giving interest, non-interest instruments like, okay, the slide is off. So except this is not a Sharia compliant institution where you just focus on interest-bearing loan. But for a Sharia compliant institution, what you'll be talking about is it is financing focus because beyond loan that you give, because here the loan is expected to be not to be interest free. Here you will also be using other financing contracts like Miraba, Injara, and what have you. So that's why the focus is usually financing. Now, please, next slide. The slide is no longer showing on screen, so that I can.
I think there is network which is coming. We put rejoin and share soon.
Okay, so but I can continue then. Why we?
Okay.
Yeah, instead of using that to delay us. Now, so another area which we talked about earlier is about how is the profit that is earned from these Sharia compliance instruments, how are they shared? So for the financial institution, a typical financial institution, it is paid to the shareholders. But for here, it is shared among members. Now, let's now go to some of the things I what is why is this very important to us? Now, because it is welfare driven, it's another issue that can cause an issue. Because most of the time, what do we mean by non-performing facility? For the conventional cooperative, we're talking about non-performing loan. But here, like I mentioned earlier, what we do to make profit can only be with a share compliance instrument or a share compliance contract. And that is why it is facility. All it's a loan is also a facility, and a credit sales or a lease that is done is also a facility. Yeah, so and that is why we're calling it non-performing facility. So now, but why is this discussion on what makes it important? Because as you give out financing, you're going to have this to classify this. So to make it easy, what we've done is to look at it because for if you want to slowly look at it from an angle, you might have issues. So we'll try to look at it from the definition from CBN Prudential Guideline, because Prudential Guideline will help. What is that non-permissible income? So see it as where somebody that has been given a facility or somebody that you borrow money. Now, when I say borrow money, now I'm purely talking about non-interest money. And when you have borrowed money and that person stopped to pay. Now, in line with CBN Prudential Guideline, it will not be seen as a non-performing facility until it is typically beyond 90 days. From 90 days was it called. So, but how do you understand this thing? Think of this thing like the example that I gave here, like a major road in should know how should the bridge. There was a time we saw a video of people during that rush hour, and even people walking, not even vehicle, now people walking, and there's an obstruction. Do you know how it's going to work? And people are not able to. Or maybe it's a traffic, maybe it's a vehicle, and there's a traffic jam. You know what that will cause? That's exactly the similarity of how the impact in non-performing facility, because what it means is that it's going to directly impact the fund that the bank, the cooperative has. Next slide, please. So, because this impact is not just going to impact just the bank, so it's not just going to affect the cooperative only. It's going to affect so there are causes. But before I go to those causes, there are certain things that I need to make you understand, because I will not be following the slide line by line. In line with that CBN prudential guideline, there are various ways of what they call what's called. In fact, there are various classification. One, it is called so there is a stage that is called substandard. There's a stage where it is called doubtful, and there's a stage where it is called loss. So a stage where it is called substandard is the one I mentioned, that it will start. Oh, this thing is already showing indication that it will may not, this fund may not come back, or what we sold, we are not able to recover our money back. The substandard is between that and 91 to 90 days, when the money now comes to what we call a past due.
Attention, please.
Now, the second
The
level
final
is the
announcement
doubtful,
of
which is from 180. The first one step at 180. So the doubtful, when that money becomes doubtful, it's now 180 to 360. So, but anything from below 360, then it becomes loss. Now, what is this implication? Even for a cooperative, you make provision for this past due obligation, because the moment, if you're following the standards to improve so why it's also important that a cooperative follow this standard is because it will improve your discipline and also transparency, and you'll be able to even track. But knowing that a provision, because you have to also report, because by the time it's substandard, then it means that you, in line with CBN guideline, then there needs to be 20% provision. When it is doubtful, then it is 50%. The moment it is now lost, then it's 100%. What that means is that it has impacted on the fund that the cooperative has towards it. It's automatically reduced the liquidity, the fund, what you can do as a cooperative, and it also will affect members' dividend and also the sustainability of that was, because if it's only when you're making money that you'll be able to talk about being sustainable. But what are these causes? One of the causes is usually that we, as a cooperative, because it is member, usually we always feel that because it's someone that we know, it's someone that we can always deal with. So the credit appraiser, the appraisal period, the assessment period of these people is usually not very strong, unlike what's it called. And well, the other argument will now be that the whole essence is to ensure that people have easy access to this facility, and that's why you cannot make this decision. But we still also need to ensure that we still follow that 5 C's of credit, the 5 C's of credit to appraise each individual, even as a member that looks at this. And because we still feel that it's an informal, we just sign there and you just sign and everybody will go. And we don't know that, because little by little, we still keep draining the liquidity of the cooperative. And also because most of the time, usually, especially when it's a staff cooperative, we focus on the payroll. I can tell you that a financial institution, a standard financial institution, will not focus on payroll alone. Because if the person there could be loss of job, there could be what's it called. We rarely make use of the takafu, and that's where the takafu can come in. But maybe when we get to some of the things that we can do to reduce this thing, we don't make use of the takafu in this area. because it can help with job loss and also incapacitation, because that can be what can happen to anybody. And also to usually work for record keeping. So let me give you a particular instance. My wife works in one of these government schools, so she's a civil servant. So during the Millennium Festival, they wanted to sell this livestock. So we purchased ram and ram and also cow from them. So what I discovered is that she was supposed to pay, but because we had issue with the cow that we booked for, the ram that we booked for was not the type. We could not use the ram. It was not up to the years. It was not up to 2 years. So we could not slaughter the ram that was given to us. So what we will have to do was to now say, okay, since we decided this cow rather has been allocated to us, so we have to find a way. So we collected the ram from the cow from them and find another buyer to buy the ram from us. But what now happened was that because of that back and forth, I was now the one that now had to remind my wife 2 months later that we stopped maybe kids to that was and they've not deducted. I said, they've not deducted this thing. Right. Imagine that happening for with that. And this is a lot of money, close to £1 million. And yet they are not able to track. The fund that they are supposed to have taken, they did not take it for 2 months. So that obviously shows for record keeping. And automatically what that means is that it's going to impact to start looking for who did we sell this thing to, who is owing us and all that. So in using, one of the things I would also recommend is how we use technology to leverage some of these things. Because with technology, we'll be able to track. And another thing is the economic actually people always complain, people always divert, people always find that place use money. And there's nothing we can do about it. And I was reading a material while and I was reading somebody where the person was saying that even as at in the 70s and even early 80s, people were always talking about not having money to do things. So what I'm trying to say is that there will always be economic growth. Go to US, people will complain. If you go to Malaysia, people will always complain. But what I've seen that distinguish all these people different from us in this particular is that the discipline is one of the things that makes them different. And also the system has always been what's different, because now with the system, even if you are holding an informal sector, there's a way the government it will be attached. So one way or the other, the government will be aware. So now what that does is that somebody cannot just hold. So the only way you can hold someone, because even the cooperative are always and those that are are also known in a way by the government. So this overall was it is not allowed, because people know that their credit report will have a way of affecting them, even for them to be able to rent an apartment. Their credit report will affect them. So now this will make people to be very disciplined, whether they like it or not, because the system will make sure they have. But now, meaning that for here, where the president, we don't have that structure, what we need to do is to ensure that our documentation is stronger, because I don't have time. Our documentation is strong, and we don't treat this money like it is our money. You know, when people say, oh, if you see this money as our money, not their money, because when the money does not come, it affects the ability, you will not be able to take, and you will not even be able to get anything back in return for a surplus that will be distributed. Business like this. Next, after that, business when I was speaking about this. Now, so some of the things I've also mentioned this in adopting what's it called, because it will help to ensure that there's professionalism. Adopting this CBN prudential criteria, what's it called, prudential classification will obviously help, because that's the only way you'll be able to thrive. And also doing that provision, because in your what in the reporting. Next slide, please. Now, so to now ensure, so now take note of something. For the conventional cooperative, they can charge penalty. And when they charge penalty or even increase the interest. But for you, as a Sharia compliant institution or a cooperative, the impact of that is more severe on you. And that is why you have to do your more than the conventional cooperative. Because here, if you don't identify the default on time, what it means is that when somebody defaults, because that money has become a debt. And when it's a debt, you cannot ask that person to add to that debt. In fact, if that person adds to it, the money will become not permissible. And what it means is that it goes to your charity fund. So, yes, you might not have a lot of funds in your charity to now be, of course, used for other charitable use. But what that means that it defeats the purpose of why you set this up. Now, you might say, yes, it's going to increase your what you cannot permissible income. But also know that somebody that is unable to pay the, let me say, the Ojuowo, like Yoruba will say, will not eventually be able to pay this penalty. But know that for the conventional, they can increase, which they can help. But we have to ensure that the process that we're setting in place, this pre-financing control that you put in place is not just a one-time was it's not like when you see somebody else, you institutionalize this thing and ensure that you also monitor this thing in time. Because some people, some people will not pay back when they feel that nobody is disturbing them. Some people need to be reminded for them to know. And because sometimes some people will now start putting the Quran says that when the debtor is not able to pay. But we're looking at a debtor that's truly not being able to pay, not a debtor that is negligent, out of what's called, out of nonchalance and all that. So this is another issue entirely. So what's ensuring that there is always a preventive measure put in place, and that is where some of the things that we're going to have in place, not just like I mentioned earlier, over reliance on the payroll is one of the things that what people always feel that was called. Oh, I'm tired. In fact, some people will take facility, hoping that next year they're going to be promoted. And when they are not promoted, it affects their flow based on what they projected. So we must find a way to ensure that we're able to cover some of these things. Because, like I said, it will hurt a cooperative more, a Sharia compliant cooperative more than a non-Sharia compliant cooperative, because they can go all out. They will recover their money. They will also recover the additional interest that they've added to it, and they will also penalize that person. But here, the only instrument that you have is the penalty, and that penalty obviously cannot be returned to the liquidity of the cooperative. Can only go to non-permissible income, and the non-permissible income has a strict rules. You can also make use of the CBN, the one that fails release on non-permissible income, to also serve as a guidance to how you can also, because I know that you have your own Shura council, you might have your own Shura council. If you don't have, it's always encouraged that you have that, because you might not want to have the former one that financial institution now, which is called the Advisory Committee. You can have this Shura council where you have some scholars that's going to guide on how these things should be structured accordingly. Next slide, please. So now, I think mentioned this a little bit about it. Now you also mentioned how was having a council to help guide how it was going to work. And like we said, a penalty can only be applied as a detriment. It is not. It just to serve as a detriment. It's just to encourage people to pay on time. What you actually need as a cooperative is a them to pay back on time, and measures have to be put in place. Do not rely so much, like I keep saying it. Those reliance will not be more on payroll. You should look for other means. That the any other asset, because there are some assets. What kind of collateral are you looking at? sometimes some of these people could have to cook. You can even have them to learn some of these things so that, or some other financial instruments that they have that you can easily access to. But they have to be quality. It's like you don't, let me give you a particular scenario of some people that was asking for a collateral. They gave me a collateral, but the collateral is in the family house and the person was giving. Imagine even it was when you are accepting a family house as a collateral. Obviously, that already shows that even if that person defaults, there's no way you can recover it because the family house you cannot recover. So
The
you
final
just need to
announcement from PBS like QR 5917.
I put asset and then recently converted to cash recently. Because like I
The
said,
final
next life is going to harm everyone. And so this is just the important of what's it called, you record all these things. It helps because it also follow the longest verse of the Quran. The ayah in Surah Al-Baqarah, Quran 282. Yes, that's the ayah where Allah, that's the longest verse of the Quran where Allah talk about documentation. So it is very important. So it is not something that we can, what's it called, like I mentioned earlier, because with that you will not be able to track. And sending early warning, or sometimes, like I said, if you don't remind people will not know. And like having a guarantor too is also what's well. Requesting for a guarantor will also help. Most importantly, monitoring. Monitoring, because without monitoring, even when you document, it's going to be useless. Next slide, please. Because when you want to go for a recovery, this is where you go. Like this is the long strategy that you can always have in place. You have to digitizing the process, monitoring tools to ensure what's going, enlightening the members on the impact or the damage that this non-performing facility will cause them and what's it called, of course, and also to ensure that you also diversify this thing and also a review of this thing, the Sharia review of all this facility to ensure that they have not just even but also a credit monitoring, like I said earlier. Next slide, please. So, in conclusion, the takeaway that I want us to know is that the strength does not lie. The strength of a corporate does not lie in the balance sheet. Oh, we're giving billions or millions of facility out, but what's the strength of it is in its member, the commitment that the member has toward that share value. Because you can have so much balance sheet, so much big balance sheet, you're giving out facility to all your members, but whereas you have a bad what's it called? You have a very overpolluted what's it called? And you have a lot of classified loss facility in your book. In fact, you might reclassify your home, not even following the CBN credential, make it more stringent because you don't have the strength that the financial institution. So instead of saying 90 to 180 days, you can reduce your own to from 60 to 90 days as substandard. And the next one, the doubtful, you can also reduce your home towards it because you don't have the strength of a big financial institution. So instead of following CBN guideline, then reduce it, maybe reduce 30 days from it. So without 30 days, we'll be able to extract it. You know that this is dangerous. Like I mentioned earlier at the beginning, it is like an impediment that you have where there is a lot of traffic of people. That alone will stop everything. Bad loan is a bad facility, then it's damage to the entire system. Irrespective of the bank. Look at even the big banks that you've seen that have collapsed today now. One of the major things that made them collapse, if I've already said the bank is in distress, is because they're giving out loans conventional anyway. They're giving out loan but that they cannot recover. That's the only thing that makes it unconstitutional. When, because whatever you give out becomes your asset. The assets that you cannot recover those money automatically default. So if those ones that has a big structure can fall, then because of one thing, the only thing that makes it them fall is because they are not they have a weak credit process system. And when you have that, so that shows the importance and the damage, the virus, that this is the virus, non-performing facility is a virus for cooperative. Thank you.
All right, Jazakumullah khairan. Indeed, that was a very, very engaging one, despite the fact that we have some difficulty or challenges from our lecturers' end. At least we could still, from our own end, I could still able to attest that at least beautiful things were understood and also beautiful points were well noted as well too. So a quick one before we release our lecturer, just like we know that he's currently on the move on transit. So before we release him, I don't know if you have any questions. So we'll just take about 2-3 questions. So if you have a question, you can just signify by raising your hand, so I can pick you to ask your question before we release our lecturer to the call. Do we have questions? Do we have questions? Do we have questions? Questions, clarity, contribution? Do we have any? Do we have any? Okay, Shakirullah Amoko. Another person. All right, so Mr. Shakirullah, you
No,
can
so,
unmute yourself and ask your question.
Assalamu alaikum.
Wa alaikum salam wa rahmatullahi wa barakatuh.
Our presenter, you have done so well. Even though the interruption of the airport is making us to miss a lot of the things he's saying. I read area where you said maybe the penalties should not be part of the money to be shared. Maybe it should be given out. It should be given as charity. Should that be in addition to the fact that the cooperative, they have their zakat template? Anytime they have the profit, they first remove the zakat to be given out. So that should be in addition to what, and though our own form of this thing, we don't have penalty directly. Our own is related to how you actually, what you have. What you have determines the dividend you gain. So we don't have penalty. The penalty, indirect penalty, is that if you don't contribute regularly, maybe because of loss of job and whatever, we will not expel you. But what you have, the percentage of it is what you get as your dividend. But why I just want to ask that question is, if they have zakat already, does that mean that that penalty will be added to that zakat to be given out? That's my question.
All right, so thank you very much,
Okay,
Mr.
thank you.
Shakirullah. Okay, go ahead, sir.
Okay. So thank you. I just have to quickly talk because before they make another announcement. So, so what I would tell you is that zakat is different from the penalty. A penalty is considered.
Attention, please.
Okay, please let me just allow them to announce it.
All right, sir. Thank you, sir. Okay, we'll wait.
Okay, so thank you.
Attention, please. Final announcement of the please for people 723 to Anambra. And please.
Okay, so before it will come up again. Now, so zakat, if you look at zakat is supposed to be taken from a wealth that is legitimate, not permissible income. That's why it's called, the penalty is considered as non permissible income. In fact, it is a purification of your legitimate earning. And that penalty, because it is non permissible, automatically will go to a charity account and you are supposed to be. In fact, you know, there's this what's it called that we all know. Allah is pure and we never accept anything except what is pure. So it is not considered something that you also benefit from as a cooperative. So it is a fund that is separated from your legitimate fund. From legitimate fund is where you come, you will talk about zakat. And zakat, I don't know whether you're talking about zakat as a cooperative, that you're paying zakat, but that should be another discussion that I want to have because of what's because I need to understand the zakat that you're talking about, whether as a cooperative or from an individual that you're talking about taking zakat from. Because if the zakat is from a cooperative, it's a different thing. If the zakat is from an individual, it's a different thing. From now, I'm talking about the cooperative moving that money to a non-permissible account, and from that non-permissible account, now give it out without expecting anything back on it. You cannot even benefit from it. And this your model is interesting too. That I would love to understand how you structure it, because you also need to be careful of penalizing someone, because penalty, even though you are not collecting it directly as cash, taking it in kind or you benefit from it in another way too can also be illegal. So you need to, I think you need to talk to scholars, and that's why I was talking about having a Surah Council. What have they said about this form? But from your description, I will tell you to be careful of it, of taking that money as a legitimate one. Thank you.
All right, sir. Thank you very much. I hope that provides, an explicit answer to your question, Mr. Shakirullah. Also, just to wrap things up, inshallah, we dropped the YouTube page already, the YouTube link for some of the videos on the lectures that we've held before, so you can just go to the comment section and copy the link and paste it and follow the YouTube channel as well. So that'll be well appreciated. So we are going to round off the session now, inshallah. So we'll call on Malam Sodikido to give us a brief again as a closing remark. Malam Sodikido, Bismillah.
All right, thank you, Mr. Bekudus. And just to once again say, we indeed thank everyone for taking our time to join this session. Much appreciation would go to the lecturer, Mr. Lukman Seriki. I do understand the challenge. It wasn't planned, really. The conflict is currently facing the boarding time and the light, but he indeed made effort to ensure that despite the inconvenience, he had to still make it, because he had given commitment to deliver this lecture for Halcore. We indeed appreciate him, and we also apologize to all of the audience that you could have gotten a better sound quality or audio quality, if I could put it that way. But despite all of that, we were able to pick a whole lot from the session. So a very special thank you to our speaker and also everyone that took our time to join this session. Halcore is a technology company. We are building the first Sharia compliant digital infrastructure. The cooperative management platform is just one of our products. We also have in the pipeline a couple of ethical products. The goal is to ensure that we make ethical financial services very available to people through digital technology. And we are working with key stakeholders in the ecosystem to make this a reality. A quick update on where we currently are regarding our flagship product, which is the ECBAS, Ethical Community Banking as a Service, which is our cooperative management platform. Some months back, onboarded a few cooperative, just two of them on our sandbox. So we did early testing with them. We are very concerned about building something that is Sharia compliant through technology, and also getting real feedback from users. So we got feedback from a couple of cooperatives, and those feedbacks were what informed our MVP iteration. I'm happy to announce that by early next month, we would have the platform ready for use. But in as much as we are rolling out the products by early next month, I can see a couple of cooperative admin that joined our previous section. Our current database says we have about 50 cooperatives that have joined our Safir series. We'll be happy to engage you. We'll be happy to share what we currently have in terms of our design prototype, so we can incorporate certain feedback before the official launch of our product by December. So if there's any cooperative administrator, there's any cooperative member who is very concerned about leveraging technology to make the cooperative activities much more easier, we are more than happy to engage you. I'll be sharing my contact details on the chat box. I am Sadiq, the CEO co-founder at Halcore. We are more than happy to engage. My colleague on the call as well is a product manager at Halcore Technologies. So we are happy to engage, get your feedback, incorporate. The goal is to see how we can make ethical financial services much accessible to people. In a concluding note, just also announce that the Safir series is a monthly session. We'll be having the final series for 2025 next month. We'll do communicate the topic, the lecturer, and all other important details. Once again, we say Jazakumullah Khairan for joining, and we look forward to seeing you in subsequent session. But if there are any comments, any feedback you'd want us to give answers to right on the call, we can take one or two before we wrap up the session.
All right, so Madam Sadikido, thank you very much. Jazakumullah khairan. So do we have any comments, any addition, any question that you probably want us to answer before we end the session? Any? Okay, I do not think that we have any. So, Madam Sadikido, you can just drop your.
And his hand is up. I don't know if it's a previously raised hand.
Yes,
or
it was previously raised when he wanted to ask question the other time. That was when he raised his hand. Okay.
Okay, you can wrap the session up. Stop this.
Okay. So you can kindly drop your contacts on the chat box. So for the new admin cooperatives that we have here, so they can pick it up and reach out after the call. So inshallah, this is where we are going to round off the session today. Jazakumullah khairan for everyone that has joined the call. Inshallah, next month we are going to be having the final, Safir series session for the month. Bismillah. So please do want to reach out if there is anything more that we can offer. Thank you all very much for joining. We really appreciate your time. Let's recite Surah Al-Asri as the joint recitation to wrap up the session. Now, his number, he dropped his number already. So the contact number,